Adrian Foster from Rabobank. He's here with me now. Adrian, well, you've got this overlay of the concerns about US growth, then you've got these concerns about these European debts, and the Greek problem. We don't seem to be really anywhere nearer to having a resolution there either.
Yeah, these have all impacted sentiment quite extensively recently. I think, interestingly, on Greece, if I stand back and I think about the different incentives different people in Europe might have, I don't see that there's a strong incentive actually to finally put this to bed, to solve it once and for all. I think Europe has the resources to solve it should they choose, and of course the German economy is remarkably strong over the last couple of years.
Everybody uses this phrase, though all they're doing is kicking the can down the road.
They're kicking the can down the road, I think, for one very particular reason, and that is that if you look at who's the major holder, or some of the major holders of Greek debt, it's indeed core European banks. So, of course, Europe's given a fair bit of support to the banking system over the last couple of years. Politically, not too attractive to be bailing out the banks again, should indeed Greece default. If Greece defaulted, I think Portugal and Ireland might find it hard to stick with the fiscal austerity measure. So I think they're buying time, and they're buying time for a very particular reason. And my guess is, or my thoughts are, that by 2013, a Greek default would not be as systemically important as a Greek default if they defaulted now, and that's what they're buying time for.
The trouble is, and you use the word systemically, and it is about the system in Europe too. We've also got these other peripheral nations, Ireland and Portugal in the mix here, and they could also then be the next ones asking for money.
Certainly, they've both got aggressive fiscal austerity measures in place. Politically unpopular, of course. There's no surprise there. And so I think there's a big issue that if Greece were to default, or to receive some very, very generous aid package, then of course Ireland and Portugal would be standing right behind them with their hand out saying, well, why not us as well? It would be very hard politically for them to stay the course if someone else was given, I guess, an easy exit.
It's surprising. I mean, we've got the euro price, $1.44. Is it nearly $1.45? Does it surprise you how strong the euro actually is?
Well, I think there again, you just need to stand back and say this is not a systemic issue, provided the core governments have the political will to see it through. This is not an Asian financial crisis. There's not big cross-currency liabilities and what have you. What you've got is a very strong core and a very weak periphery, and it's very much a political issue that the core stays the track to keep supporting, I guess, the periphery for long enough.
Right. Yeah. Market-wise as well, I just want to get to the other thing, which is the signs of a US slowdown. It is called the most important data point of the month. It isn't the non-farm payroll report, the employment report, out later on Friday. How important will it be?
As you say, it is always important, and I think today it's going to be even more closely watched. We've seen an average jobs growth 233,000 through January, February, March. Very, very strong, in fact. We're now looking at a weaker number. Your own Bloomberg consensus shows about 165,000, but of course a lot of people were polled prior to the very weak ADP report on Wednesday. My guess is expectations about 110,000, 120,000, in fact, is the true expectations. 1 month
That's because of the read-through from the ADP report, is that what you're saying? And our policy that the ADP report quite often does not really send the right signal.
On a month-by-month basis, sure, it doesn't have that good a tracking record. We've seen consumer sentiment fall, we've seen the manufacturing sector ISM fall, and now we see, of course, the ADP report come out. They've all conspired, I think, to pull expectations quite significantly lower. And 1 month, a weaker reading for 1 month on the payrolls, not particularly significant, to be honest, but particularly interesting now because, of course, we're coming to the end of QE2 in June. The Fed chairman has sold QE2 as quite an effective policy for the US economy, and at the end of it we find, or we may well find today, jobs growth slowed quite sharply. It makes it harder for him to carry that story. We actually view QE2 as relatively unimportant. The ending of it will pass relatively insignificantly. But the Fed has, I think, oversold it, and I think there's a lot of interest there to see how, indeed, they continue that dialogue on the effectiveness, so-called, of QE2.
Adrian, I was talking to a trader the other day, and he was saying that the sentiment on his floor was they weren't sure what these markets, and we're talking about China, we're talking about European and American markets, they weren't sure what was being priced in. Now,
in terms of growth outlooks?
In terms of growth outlook, in terms of precisely that, interest rate outlooks as well in other parts of the world.
Well, I think markets have been heavily sentiment-driven the last couple of months. We've seen some very sharp rallies across many of the major Asian markets, Korea in particular, over the last couple of months. Possibly they have priced in too much good news. And for a little while there, readings such as the manufacturing sector ISM in the US, consistent with 5% or so GDP growth in the US, that's over. I think that's overly ambitious to expect that. There's a grinding recovery there going on in the US. more likely in the 2.5% to 3% range. And I think that's possibly the re-evaluation that we're going through now. My take on China, it's going to continue growing at around about the 9%
but what's the market they're pricing in, though? I mean, the Shanghai Composite's not been doing that much.
Well, I think when you look at Chinese markets per se, they tend to be a little bit of a domestic casino with hefty security guards on the door stopping foreigners from getting involved. So it can be a little bit difficult to see actually what the message they're sending at the best of times.
Adrian, great having you on the programme as ever.
Thank you, Rishaad.
Adrian Foster there, he's from Rabobank. We've just been talking about a variety of things from non-farm payroll reports. The Greek crisis is one, and where do the markets head from here?